Hey everybody, Steve Olson here at FIG. We get a lot of questions, sometimes over and over again here, about how various components of our business work. And one of the ones that I think it gets asked a lot, but probably not as often as it should, is about leasing. And I want to present this with a little bit of context. Imagine you bought a apartment complex. It's got 200 units in it, and maybe you syndicated it. So you're the managing partner and you got a bunch of people to bring in money, and you all bought this thing together. Let's say it was a new construction apartment complex. So you had to go through the build process, and then you had to turn around and lease this thing as it completed, right? These things don't complete all at once. You might get one or two buildings in the complex completed, and then they kind of roll through there over the subsequent months. So you got to lease it now, right? So you can imagine when you're leasing in the middle of construction or the seasonality component, sometimes you have to do little incentives. Sometimes you have to be a little creative in how you do that. But it always takes time. Even in a really healthy market with population growing and a housing shortage, when there's huge demand for rentals, it just takes time to place qualified tenants. Sometimes it goes quickly, sometimes not so quickly, but you got to plan on that. So what's interesting is if you owned that 200-door apartment complex, you got a couple leases one week, you'd feel pretty good, right? But here's a problem we run into at FIG a lot. We have 200 doors, but it's not one owner, right? It's you. It's 20 or 30 different individuals, doctors and dentists and business people and IT professionals, whoever, that all own fourplexes in this project. And you want it leased yesterday, which is understandable. So you have questions about, well, how do you navigate that? How do I make sure that the person across the street, isn't getting preferential treatment over me and that my units are going to be treated fairly through that initial lease process? Because that's the hardest part. When we get the project fully leased and there's an occupancy rate of, say, 95%, this isn't an issue anymore because at any given time, there just aren't very many vacant units. But when you've got 200 of them hitting the market over 8 months, no matter how you slice it, you're on the wrong side of supply and demand, and you've got to stabilize. You got to get through that. So we'll do another video about the financial side of stabilization. But right now I want to talk about the exact mechanics of how a lease-up with fragmented ownership is handled. So we're going to go to the screen. This is a map of Entrada Farms, which is one of our projects in Meridian, Idaho. This thing is probably halfway through starting construction as I record this. In fact, some of the first phase units are now finishing up and the property management team is marketing for tenants on those units. So we're going to take a look at the map here, and I want to draw your attention down to the bottom right corner. You see where it says PH1? That's phase 1. Draw a little line around it. That's the first phase. And so those investors, and it's a pretty small phase, but those investors came in and they closed on the ground and their construction loans almost about 11 months ago is when they closed on these. So they've been under construction for the last year, and now these are turning over. They're getting ready to rent. So we'll talk about a few things as to how this is handled. But first, what you have to remember, I'm recording this in December. Okay, we can't really landscape very effectively in December. So you're leasing units at not a great time of year when you can't get landscaping in, right? So that combined with the fact that there's construction happening in the rest of the project means sometimes the property manager is going to do incentives. Oh, hey, here's a construction special. X amount of dollars off of the first 3 months of your rent, right? Now, as I record this in the Boise Metro, they're probably not going to have to do that. That market is hot right now. Properties are leasing very well in that market. But if it wasn't going so well, they'd probably do some aggressive incentives because the name of the game is to get your properties full and to get rental income coming in. So we look at this first phase and we record this in December and January. That's when these units are going to turn over. Okay. You can see that A right here is a duplex. There's only 2 doors there, but then these other units, B, C, and D, those are fourplexes. So more than likely, the very first unit completed in this project is going to be A. Right on its heels is B because that's an attached building. It's going to be basically at the same time. And then you might see a few days later, maybe even a week later, C and D complete. So now, if I count these up, we've got 1, 2, 3, 4, 5, 6. We got 14 units that have just hit the market. And what's going to happen is the property manager is now advertising online and through brokerages and whatever they have to do. They've got a lot of ways of doing this. And the first tenant that walks in the door and is qualified is going to be placed in the very first unit that was completed. So let's say that it's A. I'll color it in. That tenant goes into this unit right here. And guess what? Maybe later that day or later that week, another tenant comes in. And that tenant is the second one, and therefore they go in the second completed unit. And then you can see the third and the fourth. So now everybody in phase 1, which is the only completed phase, has a tenant. So now tenant 5 walks in the door. Guess whose turn it is? A. Okay. Now we're going to work around. The property manager works around to give everybody their second tenant in that phase. We call that a modified round robin. Now, it doesn't always work perfectly like that. There are laws on the books called fair housing laws. So let's say that the 6th tenant walks in, right? It's technically this investor's turn in unit D. And they walk in and the property manager shows them unit D. But they look at C and they say, well, I like that one better. It's closer to this open space down here, right? You see that open space. I want to move into that one instead. The property manager can't and frankly shouldn't tell him no. It's a completed unit due to fair housing. They can't discriminate and say you can't move in to a place that's technically available. So every now and then what happens is a tenant leapfrogs and they go to another one. But for most of the time, we can generally stick with that round robin, and it's a pretty good idea for how things flow. And what we try to do, now you look at this, look above where I was drawing into phase 2. These black dotted lines, but I'll draw around it to make it a little more visible. See that shape? Kind of a backwards Utah shape is what it looks like. So now this is complete. So we try to get as much done as we can in phase 1, but if phase 2 comes in, then they're in the rotation now as well. So maybe the 12th tenant comes in, phase 2 is completed, and then we start moving. Everybody gets one. And now another tenant, and now let's go back over here, right? The idea is we're trying to fill the farthest back completed units first because they're the ones that have been incurring fixed costs, like mortgages, like HOAs and taxes for the longest period of time. And so what you can see sometimes when this happens is if these phases are delivering through the winter months, which is the slowest time, right now I'm up into phase 3, it's not uncommon to see property management sign anywhere from 1 to maybe 5 or 6 leases a week. And as I record this, what you'll see is we go through the winter, tougher time. You see that amount of leases per week. And then there's usually a little bit of a spike in March. What happens in March? That's weird. Tax refunds start getting mailed out by the Treasury. People say, hey, I got this unexpected $2,000. I don't like where I live right now. I'm going to go find a brand new rental. So you see a little bit of a spike in March. Then it subsides a little bit again. And then usually in late April, things rev up significantly. We're talking about placing tenants in here instead of, a couple a week. We're getting 4, 5, 6, 10, 15, sometimes 20 signed applications a week. In fact, in the Boise Metro, in the late spring of 2020, getting as many as 60 rental applications per week. So you might kind of slug through the winter. I got a tenant, maybe 2. It helps with some of my fixed costs. And then bam, as we hit into that prime leasing season, typically end of April through September sometime, usually cleans things up pretty nicely. And then it's a little slower through the fall. And then the slowest portion, of course, when we talk about, I would say mid-October through sometime in February is the slowest season. But in any case, it all evens out. And through the modified round robin, they equitably distribute those tenants to help offset that disadvantage in the business model, which is the fractionalized ownership of a FIG Fourplex project. That's all I've got for now. I hope this helps. See you next time.